We've had a lot of readers and subscribers bring up Symbotic. That's because we've been covering the warehouse automation theme, looking at companies like AutoStore, Berkshire Grey, Ocado, and a lot of people mentioned Symbotic as a stock that we should cover. And indeed, we have covered this firm in the past. So earlier this year, we wrote this piece on Symbotic called A Pure Play on Warehouse Automation. And I'll put a link to that in the description of this video. And that's probably a good introduction to what the company does and the bull thesis. And that's not what we're here to talk about today. So we took their most recent S1 filing and dug through it to find all the interesting tidbits that could provide investors with some insights. And we noted a couple names mentioned quite frequently. The first is C&S. There's 139 mentions of that firm in the S1 filing. There's also 124 mentions of Walmart. And generally speaking, whether it's in their SPAC deck or their investor presentation or recent quarterly earnings report or the S1, information is really sparse. So we've taken what we were able to glean and put it into this presentation. So let's start talking about Rick Cohen. So this gentleman is the founder of Symbotic. He also owns 75% of the company that's following the SPAC merger. He put his own funds into it, and his pedigree is quite astounding. So he took a family, third generation, regional grocery wholesale business and built it into the largest wholesale grocery distributor in the United States. And that's quite the feat. It's the 8th most valuable private company in America. A lot of people haven't heard about Mr. Cohen, but he's a billionaire from his hard work and building a company into something great. And Symbotic was born from a need that he had. And if you go into, I think it's their investor deck, they show pictures of this kind of wooden thing on some skateboard wheels, and it started there and it kept growing. And it was a need that they had to improve how their warehouses operated. So they built this robotic solution. And originally the company went through like 4 CEOs and they weren't sure if they were on the right track or if they could solve the problems. And then eventually they started showing some results and their customers began noticing. So I think the story is that somebody from Target was in a warehouse and noticed the platform, and then Target came sniffing around in 2014. And the following year, Walmart came around, and Walmart seems to be a big part of what Symbotic is up to these days. So the two firms began working together to optimize a Florida distribution center, and that pilot must have gone extremely well, because in July of last year, Symbotic said, we're going to roll this out across 25 of our 42 regional distribution centers, more than half. And there's a blog post, you can read it in the research piece, from a bigwig over there at Walmart who's in the supply chain business, and he's talking about the benefits, and we'll talk about that in a second. But then this past May, Walmart announced that they're going to deploy it across all 42 regional distribution centers. That's fairly quick, and that's a big vote of confidence for Symbotic. And prior to that happening, Walmart accounted for a substantial majority of the $5.4 billion in backlog that Symbotic had. Now, I looked up the legal definition for substantial majority, and it says 51%. That doesn't sound right. That's a majority, right? So we would think substantial majority would mean somewhere around 70 or 80%, but then again, the legal definition says that it only has to be half, or say just over half. So when that announcement was made about those additional distribution centers, Walmart added another $6.1 billion in backlog. That means at a minimum, Walmart accounts for 76% of Symbotic's business, and Walmart also happens to be an 11% shareholder. Now, this is a double-edged sword, and there's a Forbes piece that we've linked to that talks about the rise of Mr. Cohen and his work in Symbotic. It's rather bullish, but it's worth a read. And in that piece, an analyst from another firm talks about when you have a company like Symbotic working with such a large firm. Walmart's the largest private employer in the United States, and that will scare off other customers. And a good example of that would be when Amazon was working with a robotics firm called Kiva. Amazon purchased Kiva, and all the other customers were left standing there wondering what was going on, because Amazon just stepped in and did what they wanted. And that Forbes piece talks about how Mr. Cohen's success, at least based on one of his peers, is because of his ability to negotiate. Well, when you're a vendor, and that's what Symbotic is, they're a vendor for Walmart, you don't have a lot of chips at the negotiating table, and Walmart is largely calling the shots here, and that's a concern. So we don't like when firms are that reliant on a single customer. Now, I wanted to talk really quickly about use cases. So the aforementioned blog post by Walmart spells out what Symbotic does, and it's really cool. So let's say that you have product that needs to go from regional distribution center to a store, right? Stores need to keep their shelves stocked, and you need a semi truck to pull up with all these products, and they're on pallets, and then people go in there with pallet jacks and pull them out. Back in the day, I used to do that for Albertsons. So I worked the graveyard shift at an Albertsons, and we would unload the truck with pallet jacks. You run those pallets into the center of an aisle, specifically where they should be. Then you take out your box knife and you start unloading boxes, and you're ripping them open and stocking shelves as fast as you can. And the only fun in this graveyard shift was when somebody would come in and start scoping the beer aisle, and we'd all go over and look to see if they were going to try to steal beer so we could run them down and kick their ass before the police showed up. So that was my experience in this particular industry. And what they would do is pack a 53-foot trailer in a human game of Tetris for transit. So from the distribution center, you've got to load all the stuff the store needs, and you need it to fit just right. And you have to load the pallets right so that they match the store aisles, so that guys like me working the graveyard shift can sling those things on the shelves as fast as possible before the store opens. So when the truck arrives at the store, as I said, you manually get the items where they need to be. Well, in comes Symbotic. They use a complex algorithm to store cases like puzzle pieces using high-speed bots that move at 25 miles per hour. What this does is it allows you to put pallets into a truck that are optimized, custom store and aisle ready pallets. It takes the guesswork out of unloading the trucks, because usually things would be wrong when we were trying to stock. So you might have some boxes in a particular aisle that needed to go to another aisle, but what this ends up doing is speeding the intake process, increasing the accuracy of freight being stored for future orders, expands building capacity. I mean, if you've been involved in this sort of work, you understand just how great this solution is. And of course, it's going to save Walmart money, and Walmart's big push. So we happen to be shareholders in Walmart for a while now as part of our dividend growth investing strategy. And they're always talking about how they're going to use technology to do things better. And we're really stoked to see they're doing that. But when it comes to Walmart and Symbotic, here's some pretty key numbers. So first, you might notice in the left-hand side here, the revenue lumpiness. We saw this with Berkshire Grey, and it's characteristic of a company that's working with a small number of customers. And here you can see in the bullet list over the years how their dependency on 2 customers is increasing, not decreasing. So you see 2019, customer A, that's probably Walmart because they're the larger one there. And customer B, we're not sure who that is, accounted for 80%. Then the next year, 88%. Then last year, 95% of Symbotic's revenues came from 2 customers. So customer A, probably Walmart, right? Based on the backlog, we can assume that. Customer B, probably not C&S, and that's because they're a related party, so that needs to be disclosed in the S1. And it's probably not Target. And the reason we say that is because part of that Walmart deal was saying that Symbotic couldn't work with one particular firm. We don't know who that is, but it could be, since Walmart and Target are competitors, it could be Target. Now, Target is listed along with Albertsons as clients of Symbotic, so that doesn't necessarily mean it's Target or not, but it could be Albertsons. And the reason we say that is because in the SPAC deck, it mentions that Symbotic solution has been rolled out to 2 of Albertsons regional distribution centers. Now, when you're watching these numbers, be careful about what you're looking at. So for example, last quarter, it says that 90% of Symbotic's revenues came from one customer. Oh, maybe that means that they're only working with Walmart. Well, you need to look at what happened the prior year. In the prior year, 77% came from one customer. So this is probably a case of revenue timing. So when you're looking at these allocations between customer A and customer B, assuming they continue to be further concentrated, probably do it at an annual level. And then you can see what percentage of revenue Walmart is contributing. As we said earlier, it's probably going to be a lot. Now, one thing to consider here around gross margins, you can see here, this is taken from the S1. It's simply the 2019, 2020, and 2021 basic financials. You see there, they're selling systems, software subscriptions, and operation services. So the latter two will be the recurring revenue streams for the business. So just selling systems, eventually you're going to get everybody with a system, and then that revenue will start to tail off. And by the way, here you can see how the Rona impacted them in 2020. So anyway, go down to the bottom there and you can see gross profit, and you'll see that, look, gross profit has to be positive. Otherwise, you're selling a solution that you're having to sell it for less than what you can make it for, and that's not a business. So we can see that as time goes on and Symbotic scales, they're starting to see a positive gross margin. That's great. And then on the bottom here, this is interesting. This, as we said earlier, they have to show related party revenues. This is a deal they have with C&S where they're doing service and operations for an installation they did there. And those are in millions. So in 2019, Symbotic charged C&S 2.9 million, and the cost of that service and operations was 2.7, so pretty low margin. And you can see as time goes on, you see where they continue charging the same, but the cost of goods sold goes down. That's great. So we want to see high margin recurring revenues in any business, right? Remember, as we said earlier, art is going to be dictating the future of this business. And the fact that Walmart is a marquee name also contributes to why this company has been surging. It's highly volatile, and why we would consider it to be very overvalued. Here's a look at simple valuation ratio. This is market cap divided by annualized revenues. You can see on the left here, Berkshire Gray, they're at a 7. So that's their market cap divided by annualized revenues. Then you have AutoStore. You see AutoStore has higher annualized revenues than Symbotic, but the market cap's about half. So they're at an 11. Then Symbotic's at 27. On the right-hand side here, you can see we took this late June. So these numbers may be off a little bit, but it's just an indicator of stocks in our catalog, notable names that we follow, the valuation ratios for each. Snowflake is probably the highest valued SaaS firm out there. And Symbotic, although it's kind of apples and oranges, but generally speaking, when you're looking at tech stocks, you can make a comparison. It's useful. Symbotic is overvalued based on our simple valuation ratio. That's something to consider. Then the reason for that, well, again, retail investors, even though they had their fingers burnt horribly by SPACs, when there's a SPAC that has a lot of stuff going on with some big names and it's easy to understand, they pile in. So there also may be some meme stock element to this. We haven't seen that, but we wouldn't be surprised if this wasn't being cheerleaded. So we'll see once this presentation goes out. In the comment section on the article, that usually gives us some indicators. So just to conclude, as shareholders in Walmart, we're stoked to see this automation being put in place. That means that our future dividend growth is in good shape, and Walmart's dividend the growth of their dividend started slowing, I believe, to the low single digits, and the use of technology then should help them increase those very tight margins by decreasing costs, and that allows them to continue increasing dividends over time. Now, Mr. Cohen, as successful as he may be, and as he was saying, in the grocery industry, it's a small world, so he certainly knows people over at Walmart, and that's probably helped a lot. But he now dances to the beat of Doug McMillon's drum. Doug is the CEO of Walmart. That's how it goes when you have a vendor relationship. So we believe shares right now, Symbotic, overpriced, and they're going to be subject to a lot of volatility as good news and bad news hits the wires. And generally speaking, as I said earlier, information is quite sparse. Probably the most useful thing that we found was the customer breakdown, which shows us how much business they're doing with Walmart. But what this also shows us is that there's plenty of total addressable market to go around, and there are lots of efficiencies to be realized. And companies like Walmart are very eager to implement technology that helps them reduce labor costs and increase efficiency. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this video today.